This Twin Peaks Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders. Visit sharescope.co.uk and discover the advantage.
Hello and welcome to the Twin Peaks Investing podcast. This is podcast number 142. It's the 10th of December. And as you can see, I'm back. I'm in good health. Sponsored by Ray and Nephew over the last 2 weeks, with copious amounts of Rouse honey, lemons, and Lemsip. I am back. I am sorry about the underwhelming sort of drowsy sort of approach of last podcast. Sorry, I was struggling, and the pod had to go on, and Henry, dragged me kicking and screaming through it. But I'm hoping you guys enjoyed it. We had some good feedback, did we not, Henry? Reasonable feedback.
We had excellent feedback. To say you were dying on your feet was a bit of an understatement, really. You're looking a lot better this week.
Feeling it, mate. Feeling I can, feeling better. So thank you for coming back, folks, to this pod. Here we are, podcast 142, with my brilliant co-host, Henry Viola Hare. I'm sure you are all either in the throes of or looking forward to your Xmas Christmas parties. Saw a fantastic picture, I think it was last Friday, where Henry was tucked up with his little dicky boat. He wasn't doing a waitering service, folks. He was going out in his splendour and his debonair outfits. And then we had another picture from Matt, Welsh Matt, Games Workshop expert, also in his what do you call those things? Neckerchiefs? Do you call them?
Yes, a neckerchief. Yeah.
Neckerchief. I've never worn one of them. I might have to go and investigate them because I've never worn one before. But it did look smart. So yeah. So here we are. So if you're looking forward to a works party, or you're having a works party in the next couple of weeks, you probably more than well deserved it. So enjoy. Henry, you want to tell us a little bit about your party, or can you say anything about your party that you went to last week?
Well, we had an excellent time. So I was meeting up with some friends, and we went to Zedell's near Piccadilly Circus, which is a very old dining room. And you go into it, and it looks like a tiny cafe. And you go downstairs, and it's a wonderful 1920s dining room. Beautiful marble columns, gilt ceiling, massive mural on one of the walls. And it's actually the original dining room of what was a very nice building from the 1800s that got bombed during the war. And the building got flattened, but the basement survived, and that was where the dining room was. So they've kept it all as it was. And I had oysters for the first time, which were very nice.
Very nice.
It was a very good evening. We drank rather a lot of whiskey as well, so I was a bit woolly-headed the next day.
That's what parties are for, mate, to enjoy and to indulge. So excellent. I think I was taken there once for a little look around, see, and it had like a grand piano there as well. So lots of marble. Is that right? Yeah. I think that might be the place I was taken into. I didn't stay to pay for whiskey and oysters there though, because it looked a bit pricey. So I left it there. Right, Henry. I want to start. We've had that little bit of merriment, but I want to talk about something quite important and a little bit raw, because I've had this conversation with a few people, including for locally, of late, and it feels to me that with what's going on politics wise, investing wise, and just in general, we're almost getting desensitized to stuff, to things, to happenings, and we've got wars all over the place. There's about 50 odd wars going on apparently around the world at the minute, and lots of stuff. Last Wednesday, had a fatal shooting of United Healthcare CEO Brian Thompson. You heard about that, yeah?
Yeah.
So just random individual on Wednesday went around, saw this. I'd been tracking this CEO, and basically shot and killed him. Yeah. And my thoughts regarding this is we need to have a think about how we not only behave, but actually take a moment, take stock about life and how fleeting it is. You know what I mean? I've lost some people this year. The whole of United Healthcare are probably going, what's just happened here? Their CEO's gone. Yeah, you got a $515 billion company CEO just been taken out. Yeah, that's what, just under three times the size of Shell. Yeah, 87 times the size of Games Workshop CEO being taken out. Yeah, so I just want people to just have a little think about the fact that we need to make a real connection with other people other than our immediate selves. And we were having a conversation just before you came on about somebody that you see occasionally and you're going, what are you doing here? Because you're trying to help them out. We just need to just have a think about other individuals, I think, a bit more than we're doing. Yeah. In general, some people are doing loads, I am, but some people could do more in thinking about other people. So our deepest sympathies, condolences to Brian Thompson and family and all those connected with United Healthcare in the US and elsewhere around the world. Thoughts, mate?
Yeah, I did see the headlines about this, and I've read some really appalling things online. I would echo your sentiment that the words we use and the actions we encourage others to take do have an impact. This is one of those impacts. Now, I don't know a lot about the US healthcare system. I know that there are an awful lot of people that rely on it in the direst possible circumstances. There was a lady whose case I was reading who had stage 4 cancer, and United Healthcare kept rejecting her claims for medication over and over and over and over again. Yeah. And every month is a battle. She's having to pay hundreds out on the premiums and she's dying.
Yeah.
I can understand how, when faced with that, you reach the end of your tether. I can understand that. But to celebrate the loss of life, it's not right.
It's never a good thing. Yeah,
it's never a good thing.
Primarily what I'm talking about. The other stuff to do with what they did or didn't do, I don't know anything about that. What I do know is that there has been a loss of life.
Yeah. And at the end of the day, this was a husband, this was a father of children, this was someone's son. Do all of those lives deserve to be ruined as well? I think we all know the answer to that. And again, this is an extreme symptom of what's becoming a very desensitized public discourse in some areas. And I think all of us have a duty to choose the words that we use with care and to encourage kindness and consideration for others in all things and at all times. So
words and actions, Henry. Yeah, absolutely. Okie dokie. Let's move on to a little bit about the markets then, Henry. Today, saw the news regarding Ashtead. Has been talking about it for a little while. Yeah, and they basically come out and said, "Yeah, sorry, but we've had enough." Well, what amazingly happened was they issued a profit warning. Right, the shares tanked, but what everyone was talking about was the fact that they're going to be leaving the UK. Sorry, leaving the primary listing of the UK for the US, and they may or may not consider having a secondary listing here. But that was the main talk of what I could see across social media, was the fact they were leaving. Yeah. So I think I replied to somebody saying that the primary reason that they're moving, or what they're saying is leaving, is the fact they make, I think it was 65% of their revenue or something like that in the US. But I think what they're after really is a re-rating regarding their peers in the US. Not sure what your thoughts were on that.
To be honest, I hear a lot of this carping, and I do call it carping. You have a profit warning, the shares drop, and then you cry that Americans will pay more. Good riddance. And I'm a little bit punchy on that one, but good riddance. If you can't perform as a business, why should I own your shares? I know THG, Matt Moulding, has moaned on and on and on at length about how the LSE is out to get him, the media is out to get him. Just actually look at the performance of the Hook Group for a moment. They've done abysmally. Revenue's up, maybe, but profits are non-existent. What are you actually running here, and why should UK investors, or anyone else for that matter, actually own your business? Now, in America, that link's not necessarily there to the same extent. Fine, you might get people backing loss-making enterprises, but it doesn't mean that they're going to be profitable forever. There's a big narrative at the moment, and I'm going to deviate here slightly off Ashstead, but I want to draw a parallel between loss-making investments and Bitcoin. You'll have seen the news recently that Bitcoin reached what, $100,000 a coin or something,
and just above that, yeah.
104, I think it hit.
Yeah.
Now, I think this is absolute insanity. As investors, we're effectively, in my opinion, I view myself as a steward of capital, right? I'm here to
Yep.
preserve and grow my wealth over time. And I do that by evaluating investments through their enduring long-term characteristics, their long-term merits. Cryptocurrencies, for all the hype around them, fail the most basic tests of sound investment on multiple fronts. They have no intrinsic value. They've got unparalleled volatility. They present significant regulatory and security risks. They've got unbelievable environmental impact. They generate no income. And they've got some real parallels with some of the most historic and publicly well-known investment manias of all time. Traditional investments, stocks, bonds, property, whatever, they derive their value from productive capacity. A share of a stock represents ownership in a business with cash flow, with assets, with net worth and growth potential. But cryptocurrencies have none of that. Bitcoin has none of that. Its worth is based entirely on speculation. This idea that, oh, well, if I buy it today for 50,000, I can sell it to you tomorrow for 60,000. The underlying asset hasn't changed at all. It never will change. It has no value. It's not investing, it's gambling. There's no earnings, there's no dividends, there's no cash flow. You are just hoping that someone will buy it from you for more than you paid today. And to be honest with you, if the Americans want to get tangled up in that kind of game, good luck to them.
They're tangled up, mate, because you now got a future president that's going to be pushing it. You've got the CEO of multiple businesses, including X, Elon Musk, pushing it. Meme coins, altcoins, you name it, crypto. They've got a whole bank of banks, institutions in the US pushing it, because they're seeing it as another revenue stream that they can all cream some money off from all the different parts of that ecosystem. So, unfortunately, the likelihood is that with all the volatility he's had, and there's people talking about, I think there's a pizza man who bought, an individual that bought a pizza with 10,000 or whatever it was coins when it was 6 cents or something daft like that. Yeah. So that 6 cents is now worth whatever it would be worth. Something crazy. Have you heard that story about the guy bought a pizza?
Yeah, I've heard. So this was going right back to like
X amounts of
2008.
Bitcoin.
Yeah.
But the point I'm trying to make with that particular 6 cents, there are people now ramping the whatever out of Bitcoin. This is something that's gone from, I don't know, the equivalent of a quarter of a cent. Yeah. Quarter of 1 cent to $100,000 per. And now people are ramping it. Now people are saying, oh, I bought it too, and I've made some money out of it, and I'm going to buy some more. I'm going, at what stage do you say enough is enough, or you might have missed the boat at 100,000 if it was less than $1?
What boat? This is what gets me. I mean, there's this saying, if you ever watch the Berkshire Hathaway annual general meetings, you've got Warren Buffett and formerly Charlie Munger up on a stage, and the audience get to ask questions, and somebody pipes up one day at one of the old ones and goes, oh, by the way, I've heard about this thing called Bitcoin or cryptocurrencies. I think they're wonderful. Do you have an opinion on them? And Charlie Munger turns around and looks at the guy and goes, yeah, I've heard of Bitcoin. Yeah, I've got an opinion on that. To be honest, I think it's complete insanity. If you walked past a bunch of homeless people on the street trading dog turds, would you sit down and join them? I mean,
Oh, Miss Charlie Munger. Oh, wow.
you can't put it any better than that, in my opinion. Fine, someone's going to win a stack of dog turds at the end of it, but do you want it?
Yeah. They're already talking
You
about it going
know,
to $200,000 per
oh
coin, mate.
God. I mean,
But yeah,
history is it's absolutely packed with examples of this going wrong. You had tulips in the 17th century, Netherlands.
mm,
You had the South Sea bubble in the 18th century in the UK. You had the dot-com bubble in the 1900s. Every single one of these, you had people. I mean, Isaac Newton got tangled up in the South Sea bubble. This wasn't a stupid man, and yet here he was, and he lost a fortune.
yeah.
So
It will be
before
very,
people go
very, very.
piling
It will be
in,
very interesting to see where it
I
ends up, Henry. At
think
the
I know
moment,
exactly
I
where
mean,
it's going to
I
end
had
up.
conversations with that. I introduced that lady at Mellow Derby,
Mm.
yeah, that introduced me to Bitcoin because I'd interviewed her. I think they were between $400 or $500 per coin. And she said, Pete, just get a couple and just forget about them. And I was like, me being me, I was like, I need to understand what it is and what functionality it's going to have and what the future holds for it. I don't care if it's 500 quid or whether it's 2 grand I'm putting on there. It's something that I've had to previously work very, very hard for. It's not something that's going to go, it's toy money, it's bank money, whatever it is.
What is this toy money that you can throw away? Can I have some?
That's what I'm saying. That's how people look at it. It's punt money, it's options money, whatever it is.
Oh,
It's play money. It's still something that at some point or other in a different time frame you had to work, put a shift in for. Yeah.
maybe they didn't. Maybe all of these people in Bitcoin have just come across money on the street one day that they're just
No, no, mate.
gambling
There
away.
are some significantly wealthy people who have got a shed load of money in Bitcoin,
How
and
good luck
good
to
luck to
them.
them. I could have made, I don't know, silly amounts at $500 a coin versus 100,000 now, and I opted not to. And I don't really mind having made that decision because I didn't want the volatility or the risk or the fact that one day I've forgotten one part of that password or that access and I can't access it. Yeah. Or
It's
like
insane.
one guy in Wales, I think, let the ledger go into um, a, a waste dump. Yeah, and never found it. That must be worth, you know,
Well, it is.
tens of
He's
millions
suing
now.
the council for the right. They won't, because of health and safety, they won't give him access to the rubbish tip. So he's suing the council for the right to access the rubbish tip because he's got £6.5 million worth of Bitcoin on a hard drive.
Wow,
I mean, can you
wow,
imagine
that's
crawling?
nuts.
In fact, I don't want to imagine crawling through heaps of garbage. Thank you. My life is quite. If that's what I've got to do to get 6.5 million, I'm quite happy without it.
Right. I will say at this stage, you talked about sound investments and you poo-pooed a particular stock. I do the reverse, Henry. Right. When everyone's going Bitcoin, I'm going no Bitcoin for me. Mind you, they were saying that at $500 a coin, and I didn't. But I tend to look at stuff at 1 year, 2 year, 3 year lows, and that's when I start to go, when X amount of people come out on X and various other platforms go, that's a pile of what's the word you use, dog turd. That's when I look at them, right? And you poo-pooed a stock just earlier, and I'll say
Uh-oh.
to you now that I've taken a little purchase of that stock.
Oh
Yeah.
no. The last time
Yes.
you did that, you came back a year later and cracked me over the head with it.
Yeah. So yeah, I think people will work out what the name of that stock is that you mentioned earlier, and you lampoon. So I'm not even going to mention the name and let people just have a little think, and let them go back and rewind a few times. So let's see what happens with that. Right. With regards to the Ashtead, I spoke about Ashtead earlier, and you commented on it as well. I'm going to talk now about a stock linked to the theme of what we were talking about regarding Ashtead, and that theme is about revenues and also undervalued stocks and overlooked or previously overlooked stocks. And this particular stock is called Pearson, UK listed. Um, UK listed Pearson is the world's largest educational provider. The company has been disposing of non-core businesses such as Financial Times, Economist, Publishing House, Penguin, and is now focused on educational resources and testing and becoming a testing provider. Um, I'm talking about this one, Henry, because its US revenues make up 68%. Ashtead made up 65-ish or something like that. Yeah. And it's opted to go and list overseas. Okay. And they had I think it's 2022, they had a bid from Apollo regarding their value at the time was about 7 million. They wanted about £8 per share ish. And they said no, right? The shares currently are sitting at £12.40, up 28% year to date. So versus £8 bid 2 years ago.
I
Yeah.
managed to get
It's
it up
now
to
up 50,
12.
it's now up 50%. And we talk about, and I always stress this on here, right? That investing is really, really difficult. It's really, really hard, right? It's not easy. You see everyone on Twitter and X, everyone's winning now. Everyone's up 5%, 10%, 25%, 35%, and it's easy peasy. But it's not, is it really? It's not. Yeah. So you've got this company here with an unbroken record of paying dividends since 1992. And for 18 years, one of our best that we've got in the UK, allegedly, and some people would say definitively, and I would agree that he's one of the better ones that we've got. Nick Train had held Pearson Group for 18 years on and off. Somebody correct me on that number. Might be off somewhat. And he got fed up with the shares.
This is a quick hello to you, our valued Twin Peaks Investing podcast listener. Whatever channel you're listening to, please make sure to subscribe and you'll always be the first to get the new episodes. Thank you for your continued support.
From 2020 down through to, obviously we had the, COVID issues and all the rest of it. 2020 to 2022, it was like Pearson Group again. I've had enough, but I'm sticking with it. I've had enough, but I'm sticking with it. Yeah. And Linson Train and all the other funds that were involved in Pearson Group held the shares. Then they had the bid, £8 per share, and Pearson Group went, no, undervalues us as an entity. Nick Train went, oh my gosh. And eventually just went, having scaled out. The bid spiked the shares from £6, £7, up to £8. And he went, I'm done. Right? What happened then, Henry? The shares just squiggled up. Well, sorry, went down a little bit after they immediately sold them. Went down a little bit, up. And in 2024, two and a bit years later, yeah, the 52-week high, what was it? £12.62, 63. So he had, I think at one stage, he had 9% of the whole group. Yeah. A market cap of 9 billion, 8.3 billion, sorry. That's a significant chunk of change wedded into one stock. And he's missed out in 2.5 years on 50% of a blue chip. Yeah. So I'm looking at it and thinking, not only is it an interesting stock, and only has it got a back history of having some significant sort of large entities holding the stock, but I suspect, given what's going on with its push towards AI and virtual learning is what the segment they're calling it, growth of that, and assessments and qualifications that people are going to need to compete in this new AI world. Yeah, because they're going to take your job. It's going to take your job. You're going to have to carry on skilling up and maintaining it. That's my primary research idea going forward, and also regarding what you said about stocks that were left to wither on the vine that nobody wanted. It's up 28% year to date. No one's really talking about it. It's up 50% since Nick Train went, I'm done with it. Sometimes you have to look at the stocks that other people are dismissing, are ridiculing. Yeah, because when the catalyst comes and the momentum comes back into the share, they can really outperform the ones that are being heavily ramped. Thoughts, Henry? Any dealings with Pearson?
Well, I'm getting nightmare flashbacks here because we had a very similar conversation about what was the share we covered at Mellow. It was very similar to Pearson, another publishing Bloomsbury.
Bloomsbury. Yeah. Of course.
Bloomsbury, and I sat there and went, "Oh, what a crock of!" And then it skyrocketed 60% or whatever it was. And I'm having the same reaction with Pearson, if I'm perfectly honest. I'm underwhelmed. So Nick Train selling out at 8 and missing out on 50%. Wow, what a clanger. You go, right, a professional fund manager, he knows what he's doing.
Excluding dividends, by the way.
Excluding dividends. So not great on that front. But my big concern, you mentioned 68% of the revenues coming from the US. Well, Donald Trump and Elon Musk want to defund the Department of Education over in the US, and a big chunk of Pearson's revenue comes from education spending. So what on earth's going to happen? Now, I don't know if they're going to do it, and I don't know if that's what they mean, but big red flag over there right now as regards education spending.
Do you think a government can defund an education department? Where's the money going to come to educate other people?
Well, if you'd have asked me 4 years ago if Donald Trump was not going to end up in prison for starting a coup, I'd have said no chance. And now he's president again. So my fortune telling skills are not really all that great. I agree with
mad
you.
out there, mate.
I don't know, but I think this is the thing. I don't know. Anything's possible.
Yeah,
maybe £12 will look like a great deal if he does, and it's back down at £6.
Yeah, I think given the amount of money, and this is linked to Ashtead again, of revenues that they're generating in the US, I think unfortunately there's a risk that they might even consider just fully listing over there, having their primary listing in the US. And I think there could be others that follow.
Oh, there'll certainly be others, no doubt about that one. No doubt.
So that's why I'm bringing it to the attention. It has come a long way from 2022 lows. It's up 50%, 28% year to date. It's got a record of dividends paying for going back to 1992. Is it a better investment over the next 2 years than Bitcoin? I'd rather have Pearson than Bitcoin. You're going to agree with me on that one, aren't you?
I'm definitely. I'll take anything over Bitcoin. Yeah. Go down to the pub and drink it all away.
I will buy you some wet fish, mate. There you go. Rather than Bitcoin. All right.
Okay.
Over to you, mate.
I'll see your publisher, and I will raise you a construction sector business.
Okay.
This is a leading provider of building materials solutions that build, connect, and improve our world. They employ nearly 80,000 people at 3,500 operating locations in 28 countries. And this is a business that I don't hear anyone talking about ever. The company is CRH.
Right, okay.
Now, they've got a market-leading position in North America and Europe and are effectively a really essential part of the construction supply chain for road and critical utilities infrastructure, building projects, and living solutions. If you've got a major construction project, odds are you've bought something from CRH to get the thing built. They're a $34 billion turnover company. And North America is their largest market, as you might expect from a construction business, huge country, lots of construction going on. But one thing that particularly caught my eye about them is that they're ranked amongst the sector leaders for environmental, social, and governance standards. They are considered one of the most sustainable built environment suppliers on the market, which was something that I quite liked because construction as an industry throws out a huge amount of pollution, and anything we can do to start to reduce that, is a good thing. Now, having said that, nobody's been talking about these shares really that I've ever seen or come across. They're actually up 51% in the last 12 months.
Wowza.
So for everybody hopping around going Bitcoin, give me some Bitcoin. Actually, if you just sat on this, you'd be up 50% in 12 months. So, and it's an actual real profitable business doing real things for real people, which gives you a bit of security there. The forecasts are also looking fairly positive. It's got forecast earnings per share growth of nearly 14%, which is nothing to be sneezed at.
Yeah.
And it's a fairly strong business. It's got a return on capital of 12%, which for a construction sector business is actually pretty, it's at the top end of what I'd expect to see. Usually returns of sort of 6 to 10% are a lot more common. And if you're in the contracting business, you can be as low as 1 or 2%.
I like the look of that, Henry.
Do we get the
Nice
Higgins
metrics.
seal of approval?
Well, if you'd have got a bit of a more of a seal of approval, you told me it was only up 1%, and there's opportunity for growth. I'm thinking it's already up 51%. Not as bad as a bit worse than the 28% on Pearson. I'm like thinking, yeah, but it's construction, and I've just stayed away from the construction-y bit, Henry, and just gone with the bricks. My
Well,
Michelmersh,
this is a
right?
building service. This is a buildings aggregate supplier, so it's similar to the
So
bricks.
it's still yeah. Mm,
And that
yeah.
price,
I
although
like
we
yeah,
should never
I like
take,
that. I like that.
you
I
like
like
it, although
that.
we should never take the price as an indicator of business performance because they can be totally disconnected. The fact it is up so strongly says to me that the market likes this
Strength,
company,
strength and
and that's
resilience.
nothing
Every
to be
single thing we've
sneezed
got
at.
connected. Yeah, most of the stuff we've got connected to construction haven't fared so well, um, UK footsie wise, but that's outperformed, I would say, most of the peers. Just pulled up here, Henry, the list recent news up to this week, and this lovely bit here is about continuity, okay, for CRH, and it's saying Alan Connolly has been appointed as the interim chief financial officer of CRH, the building materials company. Connolly will succeed Jim Minturn, CRH's current chief financial officer, who will assume the role of chief executive in January. So you see that? One up, one up. So that's a nice flow of not parachuting somebody in. The culture still stays there. The growth continues. I'm not sure what happened to the other CEO for that to happen, but they've obviously done well, and maybe that CEO before um, Jim Minturn wanted to go out, having done achieved what he or she wanted to achieve. So yeah, it's very interesting. I think what's happened with quite a few Irish HQs, yeah, UK listed companies, is that some of them have outperformed. They UK listed, but UKH England, let's say England rather than UK, Ireland HQ companies seem to have outperformed for some reason. I'm not sure whether that's because some of them are partially, got cleaner, less bureaucratic ties with the EU or what. I don't know what that reason is. Well, a lot of Irish companies have done better than the UK companies. Am I
I
wrong in
think part
thinking
of
that?
it's the tax regime.
Tax regime, maybe, yeah.
So you've got a lot of multinationals that are headquartered over in Ireland.
Mm,
They'll list on the UK because it's our major stock market. But for tax purposes, they're based over in Ireland and they pay. I don't know about
less.
CRH's tax arrangements, but certainly if you think of Google and Amazon, they're paying a fraction of what other companies are being headquartered in
Yeah,
Ireland.
yeah, but yeah, I
I'll
like the look of that
reserve
one.
comment on my opinions on that for another podcast.
Mm, yeah, interesting one that Henry, and
Good.
I'm sure they've done well for their shareholders beyond just this year as well. They've grown steadily over the years and done a few acquisitions as well. If I'm right in thinking back, and it's one of them where you always think, what's that term that everyone uses? Elephants can't gallop, but it certainly has this year. I think it's at 51% because it's not a small entity, is it?
Nope, not at all.
So yeah, good call on that one, mate. Right, this one's slightly opposite to the Pearson side of it and the asset side of it in the sense of where they make their revenue. And I'm talking on with regards to Brooks Macdonald, ticker symbol BRK, and just a little summary note here. Brooks Macdonald Group PLC provides investment management services, handles offshore fund management and administration services, and acts as a fund manager to the unregulated open-ended investment companies. It provides its services to private investors, pension funds, charities, trusts, high net worth families, and employee benefit consultancies. It also provides specialized funds in the property and absolute return sector and manages property assets on behalf of these funds and other clients. Additionally, the company is involved in international investment advisory services as well, but the majority of its revenues come from investment management, Henry. And how does this one work out regarding the US? Diddly squat revenue. United Kingdom, 84.5%. Yeah, Channel Islands, 15.5%. So that to me looks an interesting co. I'll pull up the metrics here from Share Paired. Sorry, Share Scope. Sorry, rebranding. Boop, 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 boop. Alert, error made by Pete. Share Scope, who have done all their rebranding. So let me just pull up what I've got here regarding some stats for them. Let me just have a quick look here, Henry.
Well, whilst you're doing that, I mean, I will make my comment about asset managers. The usual risks here apply. They're tied to assets under management, and there is more and more money getting sucked out of active managers and put into passives. So you've got this huge headwind against active managers. Brooks Macdonald is an active manager.
Yeah. However, Henry, and your caveat is absolutely spot on, being sucked out, lots of loads of stuff getting withdrawn, outflows. And you have to look out for the companies, Henry, that are saying inflows.
Yeah.
Inflows.
You beat me to it.
So I'll give you the metrics first and then go to the inflows in a minute. So we've got, Henry, forecast PE of 11.1. We've got price to NAV of 1.6, EBIT of 141%. Pre-tax was up last 168%. Return on capital employed, 7.1%. You'd want that up to be above 10, really. And years of growth, 19 years of growth. Yeah. Not many companies can say that regarding their continual growth of assets under management, continual, growth. So
really?
We are here, Rev, Henry. September 2024, full year results to June, delivered double-digit increase in underlying profit before tax, strong capital and cash position, and 19th successive annual dividend increase for the group. Group funds under management reached 18 billion, up 7%, on the prior year, reflecting a strong investment performance. Gross inflows totaled 2.3 billion, slightly down on the year before of 2.7, but still, inflows, recurring word, inflows. So you're looking at it and thinking, there's a caveat here where it says gross outflows for the year were elevated, driven by the macro and higher interest rate environment, leading to net outflows of 0.6. Performance in absolute terms over the 10-year period across all risk profiles are very, very strong in delivering a range of 30 plus pips. So 12 months of the year end to June 2024, seen an outperformance compared to their peers, always compare against peers. And essentially their revenue was up as well, 228.3 million, up 3%. Management are also cutting back with their costs, down 4 million, which is quite sizable. And profits was up 12.5, Henry, 12.5%. And they improved their profit margin from 24.5% to 26.6%, which I think is quite strong. And they also increased their dividends slightly by 4%. And they also sold Brooks Macdonald International to Canaccord Genuity Wealth Management. That should be concluded in, I think it's March 2025. And that will give them initially 28 million on top of their 42 that they've got now, which will give them 70 million in cash. So that's what I want to talk about, Henry. And again, I always have to point out, got a female as their new chief financial officer, Henry. lady by the name of Catherine Jones has become the CEO just on the 1st of November. And she will be joining a female CEO. A rare occurrence that is, eh? CEO, CFO, both female. Andrea Montague, the CEO. So female-led entity going forward. Share price hasn't done that great over the past, well, since lockdown, really. March lows of £12.75, January high of £23.50, 52-week range of £15.05 to 21.40, currently sitting at 15.50. So there you go. Over the past, well, year to date, it's up 28%, but could be better. Not done that well over the last 3 years. Been ebbing and flowing, up and down, Henry. So I think
it's interesting you name that, because I got my own fund manager that I wanted to talk about.
Okay, but let me just finish with this one though. So 2022 down 20.6%, 2023 down 8%, 2024 thus far year to date down 20%. Yeah, let me just get my numbers completely spot on. So my thing is to talk about stuff that's done well that people ignored. Yeah, stocks that have done well. You know, you mentioned the first one earlier. This is on. I'm not saying it's on its knees and it can't go lower, but watch and see what happens in 2025. Maybe there's a turnaround opportunity if you can, you can see the catalyst coming. I'm not saying the catalyst is having two females leading the company. I'm saying if they can carry on with their inflows, yeah, and keep on outperforming their peers, there's a possibility there. And some people are saying, can it get any worse regarding the outflows in the UK? If we see a couple of months of inflows, mate, November, December, January, February next year, people are going to start thinking, actually, maybe the worm is turning. That's the reason why I'm talking about that one, mate. So 3 dud years, maybe. So yeah, down 20% this year, not 28% up. Sorry, got that one wrong. So yeah, that's the reason why I'm saying that one. You were going to say, you've got to tell me about what you think about this stock first before you move on to yours without even saying anything.
The bit that jumps out to me there, 90 years of increasing AUM. Is that right?
Not 90 years, no.
How long?
19 years.
19 years. Okay,
yeah.
But still, that encompasses the 2008 recession.
Yeah.
Yeah? That encompasses 2008. Just. Yeah. It encompasses the COVID crisis. It encompasses Brexit. It encompasses what's her face? Forgot what her name was.
Liz Truss.
Cabbage. Liz Truss.
Lettuce, not cabbage, you muppet.
Oh, whatever she was, anyway. Right. So all these things, and they still managed to grow AUM.
Yeah.
That's quite impressive.
I mean, somebody will correct me on that. Come on, you people that jump on every word that I get wrong. Fine, just let me know if that's actually correct.
The bit that gets me is that if they can't grow the share price even whilst doing that, then what the heck are they like? Sometimes the market can stay irrational longer than you can stay solvent.
Yeah,
but
there is that. There is that.
I don't know.
There is that because they were down. What did I say? They were down at Henry. They got absolutely smashed, didn't they? They went from 23 quid to 12 quid during COVID, and they're still, and now they're back up at 15. So I'm just saying, maybe a turnaround. I like a turnaround recovery stock. Could this be one of them? Possibly. When will it turn around and become a recovery stock? Acquired. I don't know.
I mean, I don't think Brooks Macdonald is that big when you compare it to someone like, I don't know, Vanguard or whoever, with trillions,
tiny,
certainly hundreds of billions in assets under management. These guys are nothing.
Yeah, £261 million market cap.
Yeah. Henry. So I could see that getting
19 years of successive annual dividends increases, mate. So you're compounding. Yeah. Compounding. Anyway, let's move on to your one. You don't like that one. That's fair enough.
Well, it's not that I don't like it. It's just not that I like it.
Yeah, you've made your point, mate. Go on.
I mean, mine falls into exactly the same camp here. So this is a company I can't stand this business. I think that, if this business went out of business tomorrow, good riddance. I won't miss it. And I'm sorry to the thousands of people it employs. And I'm
Wow.
sorry to the thousands of customers that are apparently very happy with it.
And we started talking about being careful and thoughtful about other people, and
I
then you're going,
know,
"I
I
don't
know,
care
I
about
know.
it. It's a
I
dog turd.
know.
Like, I don't care about the employee." Come on, mate. Steady up on the whiskey and just take a step back
So
and a deep breath.
I've not even had a whiskey today.
Oh,
So the
nice.
this business is an investment in wealth management business. So a bit like yours, it provides
Yep.
wealth management services to individuals, to trustees, and to businesses.
Okay.
They're a vertically integrated company that primarily operate through a franchising model. And if you can't guess from my comments so far, this is St. James's Place Wealth Management. The ticker symbol
Oh,
is STJ.
the Marmite of the wealth management industry. Yes,
Well,
indeed. Yeah.
they get record customer satisfaction scores over and over again. And yet, my own opinion and that of most people I talk to is that you should never put your money with them. And God help you if you have, because you won't have much of it left by the time they're done with you. But this business, the reason I want to talk about this business is because despite my hatred of it, which is a bit of a strong word, but shares are actually up 25% year to date, and they're up nearly 100% from their 52-week lows. They're at about £8 a share. They were down at about £4 a share at the 52-week lows. And part of the story, they've just put out their Q3 update, and they said they could see continued momentum in activity, with clients engaging with their advisors to ensure they continue to take the right course of action for their finances, which presumably is handing over large wadges of cash to St James's Place. This activity has resulted in gross inflows of £4.4 billion in the third quarter, 20% more than the third quarter of 2023.
Yeah.
Year-to-date retention remains strong at 94.6%, so only 5.4% of customers left them, driving net inflows of 0.89 billion for the quarter. The rate of outflows was broadly consistent with recent periods. So effectively, what they're saying here is that they've got cash coming into the business. People don't want to leave, and more money's coming in the door, which is great. And the shares are skyrocketing. Now, again, this is a business that you go back, everybody had my reaction to it. Why would you want that? It's an exploitative business. It's terrible, but very, very high customer satisfaction scores, very high customer retention rates, and if you've got your money with them, you've made 100% from the all-time lows. So they're making someone some money, and presumably it's not just the advisors.
Yeah, they had a terrible time of it around this time last year when there was all the talk about them being investigated for charging too much and various other shenanigans. And I recall, I'm not sure when it might have been January or February this year. I had a chat went to a networking event in Leicestershire, and our chat came to speak to me, and within minutes I went, "Yeah, he works in the industry." And then a few minutes later, I was like, I bet he works for St James's Place, right? And that's who we worked for. And he was waxing lyrical about how brilliant they were. And I'm like, well, you would say that you work for them. Yeah. I'm not sure what the share price was, but I recall looking at them at one stage and the share price was about £5. And I thought, no, I ain't going there. I ain't going there because everything I'd read about them previously was not positive. I don't know, the scores of people that worked with them either as a franchisee or worked for them, etc., etc. And it's one of those companies, anyway, that I've always gone, there are better options out there. Yeah. And if I'm saying to the people that I'm not impressed by the level of charges that they're impinging on their clients and customers, then I wouldn't want to invest in them myself. If that makes sense. So I ignored it. But like you say, the shares have gone from a lower fours, something like that, back up to 8, because people have just said that's it, they're done. They're never going to come back. But the fact they lost some customers, but have started to grow it back again. I find it quite staggering. I think the market have been surprised as well by their recovery. So yeah, sometimes you have to, and I keep saying you've got to look at the stuff that makes you go, ooh, not, I'm not saying you've got to use your term about certain animals' waste. Pinch your nose sometimes. Sometimes you've got to pinch your nose, and because you're able to go do the research, find the positives regarding a certain stocks when everyone else is going absolutely categorically not. And we may even have to include Bitcoin in that. Sorry for swearing. Somebody else will find some good in a certain entity and go make some money, Henry. And that's what's happened here. But have I ever recommended St. James's Place to other people? I've never done that. I know some people who work there, who are IFAs with them, and some people that are customers of theirs, and I've gone, not for me. But they've done exceptionally well, 100% from lows.
A friend of mine has got his money with them, and he was telling me, "Oh, you ought to go and have a look at them. You're into your investing." And I said, "Yeah, I'm into my investing. That's why I'm not going to go and have a conversation with them." I mean, I forget. I'll avoid quoting the figure, but listeners, if you're curious about this, just go and do a quick Google on St. James's Place and have a look at how many of their funds failed the Consumer Duty Act. There was an act that came out where financial products had to demonstrate value for money for the consumer, and look at how many of St. James's Place's funds failed. Look at how many of them are in the bottom quartile of performance over 3 years, 5 years, 10 years. Look at how many of them fail to beat the benchmarks. And then on top of that, for these funds that supposedly aren't performing very well, look at how much they will charge you to be in them. And I guarantee you, if you were slightly curious about it before, that'll put you right off.
Whether you are an experienced or new investor, you know how valuable it is to conduct portfolio enhancing analysis and to have easy access to data that will give you the edge. As a Twin Peaks investing podcast listener, you can access an exceptional offer from ShareScope, the UK's #1 investment data and analysis software for private investors and traders. This special Twin Peaks offer is available to new subscribers only, and you can subscribe using the promo code TWINPETES. The incredible and exclusive offer means that monthly subscribers will get their second month free, and annual subscribers will get their 13th month free. Sign up and subscribe today using the Twin Peaks promo code, and you can save up to £69. Visit sharescope.co.uk for further details and subscribe to the investing and trading analysis and data you need.
Right. I'm going to talk about another stock here, Henry, which I think potentially, if they sort themselves out, could be another recovery play. So we've talked about stocks that have been ignored and recovered, and St. James's Place 100%, and looking at them, trying to give you some opportunities here to find or research some stocks previous to the other one, and now this other one here now that potentially could recover. Yeah. So this one is Bytes Technology Group, Henry, software and computing services company. We've got let's have a look at it. Market cap of 1.1 billion, forecast PE of 19.2, return of capital employed 84.2%. Yeah, ROCE. EBIT margin of 29.9. Very little debt, 0.2%. PEG of only 1.7. What do they do? Bytes Technology Group provides IT solutions and services offering software, hardware, and cloud services, and enables effective and cost-effective technology sourcing, adoption, and management services across software, security, and cloud services. The company's brands include Bytes Software Services, BSS, which supports the corporate and public sector, and Phoenix Software, which focuses on providing solutions to the public sector. It generates a majority of its revenue from software products. Geographically, the company derives its key revenue from the United Kingdom. So yeah, this one here I'm liking, because despite the shares being down 19% over the past 12 months and 25% year to date, they've actually done quite well, and they came out with some nice numbers only back in October, Henry, and they were basically saying that though revenue was down 2%, they'd increased their primary software revenue by 13.7% to 1.2 billion, primarily driven by software. And they've got some large contracts with the NHS and HRMC, which I think are going to be kept busy by a variety of different reasons. But my thing here regarding what jumped out for me, Henry, was the operating profit, which they talked about, increasing 16.3% to 35.6 million from 30.6 million. And also earnings per share increasing 19.5%. And half year conversion wasn't too bad as well, it was up slightly. And they closed out with £71.5 million in cash. And they also increased their interim dividends by 14.8%. So they're getting more and more into AI, and they're selling a lot of Copilot licenses to the client base as well. So I think this is a one where they're selling a lot of reselling stuff from Microsoft. I suspect that going forward regarding the growth of AI, that potentially they could do quite well, even though they haven't done so well of late. So a recovery play that hasn't already gone up 100%, one to put on your watch list to research. And if you see any sort of catalyst going forward and the shares moving up, maybe worth a little bit of an investigation. £1.1 billion worth of the UK stock. If we don't love it, unfortunately, somebody else will. And they've got loads of connections with lots of US companies as well regarding the software that they sell. So that's one that I want to just raise for people to have a quick little look at, Henry. And again, CEO is a female. So they do things slightly differently to their male counterparts sometimes. So we'll see what happens with that. Not been in post too long. So yeah, that's another one to a bit of tech there for you, because I've always got to talk about at least one tech stock, mate. So BYIT. Go on, ridicule that one if you may.
No, it's not ridiculing it so much. It's more curiosity about what they actually do. So they don't develop anything themselves. They just implement solutions developed by other people.
Yes. Yes. And yes.
I'm amazed. I used to work for a company a long time ago that did something similar. So they implemented something called MuleSoft, which is basically a data connection platform. It sits in between lots of different systems that don't talk to each other, but which need to access each other's data and can't. And it translates the data from system A into the data from system B and lets them read each other. You access everything through one central data point, which is the MuleSoft instance. Now, implementing this sounds simple, but is actually incredibly complicated. So you have teams of coders doing all kinds of cool stuff in the background. And there was a business doing this. Only thing was, there were hundreds of businesses doing this. There was an entire conference dedicated to people that were running companies doing this. None of them had any competitive advantage. They were all completely reliant on MuleSoft and MuleSoft wasn't the only tool that could do this. MuleSoft was one of hundreds of different products that you could select that could do this. Now, the business was successful. It was eventually bought. This was my employer. It was eventually bought by another company that was owned by Salesforce. One of these huge tech giants. But there were just as many that fell by the wayside. And my concern with Byte Group is that what happens if these software tools become less relevant or people don't want them? How easy is it to replace them? Or what if somebody from India or Pakistan or Thailand comes along and offers to do the same job at a third of the price?
That's a
Do you
very good
still have a
point, Henry. I think
business?
I suspect that's happened in the past, but what happens with all sorts of software and those sort of provisions is that they get upgraded all the time, don't they? So whether it's a Microsoft product or not, if you're sticky with Microsoft and you've got a company here that's providing those sort of services for you, yeah, via Microsoft, you're going to still have your micro. You're not going to go suddenly to, Viola Hair software or Higgins software. You're going to go, I'd rather go and trust Microsoft. So I think that's going to continue. And the margins on the business that they're doing is ridiculous.
Yeah, they're astonishing. I mean,
Could that be eaten away a little bit? Of course it could. And going forward, there'll be more and more competition. I suspect that there's a possible turnaround situation. And if they don't, and if we don't value it well enough, I'm not saying they're going to be another one that goes and list overseas, but we've got very few FTSE listed companies in the software space that are sitting above 1 billion in market cap. And what happens with them once they get to a certain size, 1 billion plus, they get subsumed by somebody else larger, usually overseas. So yeah, I think it's a possible mover on this one next year. 52-week range at the moment is £4.28 up to £6.53, and it's sitting lowly down at £4.54. So it's at the bottom or near the bottom of its range. So I'm looking at that and thinking, is there a possibility that that could actually do a bit better going forward? So that's why I'm suggesting that to just put on your research list, watch list. While you're waiting, it's paying you 4.1%, Henry. And if it gets a catalyst on momentum going forward,
that's made it a bit more attractive.
You get to a fiver, you've made 10%. You get the dividend yield 4%. You made 15% in the year. Happy days.
Can't
You know
sneeze
what?
at that.
Next time we talk about it, it's had a profit warning. It's crashed 10%. If it pays you a dividend yield, you get 4%. You've only lost 6%. It's a research idea, folks. I don't get any of these stocks. Oh, sorry, all of these stocks right. It's just a research idea. That's my three for you for this week, Henry. Have you got another one that you want to share before we talk about
I have,
the charity
yeah.
and other stuff?
Well, my third one is a business that most people will have heard of previously. I think we've talked about it in passing here and there. It's a company that I'm really interested in as an investor. I don't own it, but it's definitely on my watch list. It's a currency conversion platform which is looking to reduce transfer costs between different currencies. It's Wise Group, or actually it's technically just Wise
Wow.
PLC now. The ticker's WISE. Now they effectively are just a money transfer business, but they're categorized as a fintech, a financial technology company, and they've recently broadened out from just offering currency transfers into also offering some banking services. So you can now get debit cards with them as well. So you can put your cash in one currency on this card and you can take it abroad and spend it, and there's no currency exchange fees, or minimal. Now, this broken banking market, as they describe it, is actually huge. There are over 280 million immigrants worldwide. This is people that were naturalized in one country and then have moved to another for either work, for holidays, for travel, whatever. And that business encompasses, the money transfer business encompasses 18 trillion US dollars a year in currency transfers.
Wow.
Now, in 2021, there's a figure I pulled that equated to about 22 trillion pounds globally that are being transferred, and banks are taking a cut of this, anywhere between 1, 5, 10% in some cases. People are not getting any value back for that transfer. So if you can reduce it in theory, everybody wants to use you. Now, Wise listed a couple of years ago on the stock exchange, and I don't particularly like buying IPOs. I don't think when it IPOs is a great time to buy something. Generally, it's to give liquidity to somebody that wants to sell. But shares rose initially after listing. They then fell off a cliff, but they are now back to just under where they listed. Revenue is up strongly since listing. They've grown their revenue every year. They've got a 47% return on capital employed, and they're forecast to grow earnings per share at 16.5% next year. So this is a growing, profitable business in the financial technology space that's got a demonstrable track record, a huge total addressable market. And it's really, really intrigued me. So again, I'm not recommending it as a buy or a sell or whatever at this stage, but go have a look, read up on it, read up on the industry, because there are other names in the space. Another one I came across was Alfa Software, Alfa Financials. Tiny little business, much smaller than Wise, but same sector. Go and have a look. There are these businesses out there, and the shares are moving, and no one's talking about them. So go away and do your research, ladies and gents.
Henry, you've done the unprecedented here, in the sense of I had Alpha, sold it, bought it back, not mentioned it. I've got a price target before I was going to mention it, and you've actually hit two of my stocks today.
Yeah,
so you are
your
barred.
battleship.
You are barred. You are barred, my friend.
It's been a while since I've done that.
Honestly, I thought you were going to get through that conversation without mentioning Alpha. Horrible man. Right, let's move on. Jamie Ward, former fund manager, who writes for ShareScope and MoneyWeek, is absolutely super uber bullish on Wise. Yeah, almost every other time I see him, and we saw him at Mello as well, he conversed with me about Wise again. And to quote his words here, and one of his tweets he put out, posts on X, sorry. I said it privately in DMs, but Wise in 2024 has echoes of Amazon in 2004. If that's not bullish, I don't know what is.
Statement.
Our relentless focus on value and scope to customers means that thinking of Wise as a currency, excuse me, as a currency business is like thinking of Amazon as a bookseller 20 years ago. Could be wrong, but it looks asymmetric to me. Is that not bullish for you? Wow.
I like it,
but
I wasn't going to be that strong on it.
You're buying Amazon 20 years ago, from what Jamie's saying. He's super positive on it, mate, and he does hold the stock. I've looked at them. I'm not as positive on it as him. There's so much competition in that space, Henry.
That's what gets me. That is exactly what's put me off buying
much larger entities. They've always been saying that we do these transfers and other bits of our business far cheaper than anybody else, and the seamlessness of it as well. So that's where their efficiencies of scale may come on. I don't know. I think one of the things we'd probably have to do is speak to somebody who's actually used them, or use parts of their business to see what their experiences was of that. That makes sense?
Yeah.
That'd be a nice little piece of research. But yeah, Jamie Ward, fund manager, is uber bullish on Wise and owns the stock. So watch out, 2025.
Fair enough.
See what happens. yeah. They're not as a tech company, mate, and could always surprise. I mean, you were talking last pod about Palantir. What happened? Went up again. I think it just started to roll over a little bit, but from $5 to 70 to nearly 75, nearly 80. What is it at now? 72. You're going, wow, nuts. But yeah, there we go.
Wonderful.
Right, very well done with that one, mate. That's the wrap regarding stocks. What about the charity? Do you want to talk about that a little bit? We've got like 4 weeks, or not even 4 weeks. We've got 2.5 weeks.
2 weeks to get. We've got 2 weeks left, basically. Wow. Ladies and gents, we've got 2 weeks left to try and get this over the line. And This year, we've talked a lot about Centrepoint. We've talked a lot about what they do. We've called on your generosity to support their mission to end youth homelessness. And thanks to the kindness of many members of our audience, we've already made some significant strides towards our target of 5,000. But as we approach the final 2 weeks of our campaign, we really need all of your help to get over this finish line and hit this £5,000 target. Every young person, every person deserves the chance to sleep safely, to dream freely, and to build a future that they can be proud of. And the bedrock of that is having a safe and secure home to call their own. Your donation to Centrepoint can help to make that happen for so many thousands of young people across the UK. Whether it's providing a warm bed, life-changing support, or educational opportunities, your contribution is a beacon of hope for those most vulnerable people in society that really just need the help. Time is of the essence. With only 2 weeks left, we've all got to come together now to make sure that we've dug deep and done everything we can to ensure that no young person is left behind. Your gift, no matter the size, could be the one that changes a life forever. Please consider joining us in these final days and joining the other dozens of donors that we've had to the cause so far, and try your best to make a lasting impact for people that truly need it. Together, I believe we can provide the safety, stability, and care that every young person deserves. Now, since we aired the last podcast, we've had some wonderful donations in. We've had £20 from my friend Robert, little something to help you reach a target. We've had £25 from Lewis Tullett. Really enjoyed watching the podcast on YouTube and getting involved with all your wonderful discussions. Thank you for your analysis and your insights. Merry Christmas to you both, and the very best for 2025. We've had £20 from Dave Hollis, a long-term listener to the podcast, and through it I've learned a lot. Thank you for all that you do and for raising for this worthy cause. We've had £25 from Ben Burnett. Great hearing the work you guys are doing on the podcast, and this is a fantastic cause. Keep up the great work. £25. We've also had, and I was quite astonished when I saw this one, £125 from Eclectic Trends. There's no message that's come in with it, but that was honestly, all of those donations are very, very gratefully received, and they take us to 76% of our target, £3,818 towards our £5,000 target. So if you can donate, if you can spare even a few pounds for us, if you've enjoyed the podcast and you'd like to show your support, the Just Giving page is www.justgiving.com/page/Twin Peaks Challenge 24. That's Twin Peaks Challenge 24. Please dig deep, and thank you very much for your generosity.
Absolutely agree, Henry. Thank you to everyone that's made a donation and helped us towards that figure of 3,808. Like I say, I've got 2 weeks. I'm stuck on a lozenge here to try and keep my nose airways open. Apologies. If you can help us towards that 4K, that'd be brilliant. If you help us towards the 5, even brilliant, even better. And we'll be able to support Centrepoint and lots of individuals that have unfortunately found themselves or become homeless in 2025. So thanks once again to everyone that supported us, and please continue to do so over the next 2 weeks. Those that find themselves in the mood and a frame of mind that they want to help somebody else at such a difficult time of year. It's absolutely freezing out there. So yeah, if you can, make a donation. Thank you ever so much. Right, Henry, I'm going to quickly make note and get people started on this, because I'm conscious that when the next pod goes out, it will be nearer to the end of the month, and therefore not giving people a lot of time. We hopefully will have the sponsors of Sharescope, Harriman House, and Investors Chronicle again for the Twin Peaks Investing Challenge 2025. We've had some difficulty getting hold of individuals because they've left X and got onto various other platforms. So I'm going to say this time round and make it a little bit different in the sense of, if you're not on X, or you're not on Blue Sky, and you're not on YouTube, you may have to contact us by email. Yeah. So have a think about the stocks that you want to pick. Yeah. And I'm not sure if Henry's happy to give his email or not. Not sure about that.
I am.
You are? Okay, we'll give you the email in a minute. Okay. But if you are on X or you're on Blue Sky social, then find Henry's account, follow Henry's account, follow my account, which is just Conkers3. I think Henry's just H Viola Hair. Is that right?
HT Viola.
HT Viola on Blue Sky, and it's HT Viola on X, and it's at Conkers3 on X. Follow those accounts so that we can get hold of you and DM you if we need to. Pick 5 UK listed stocks or funds or investment companies. Yeah. And make sure you reply with our names in there, as in HT Viola and at Conkers3, Twin Peaks Investing Challenge, and pick 5 stocks, investment companies, and make sure they're in by midnight of the 31st of December. And we'll start collating them going forward, putting together spreadsheets and all the rest of it, and have it ready to start on the first trading day of 2025. We'll roll the competition again, one monthly, and you get prizes. And then the overall winner will win the main prizes in December. We're going to announce the 2024 winner in January, and month of December winner in January. Not sure we've got time. Do you want to do it now, Henry, or not?
Yeah, we can do. We've got the winners for November.
We've got the winners for November. I'm still waiting for Al Cardiff at Cardiff to give me the information for the October one. So we'll see what happens with that. If not, we'll have to pass it and give it to somebody else who came second that month. So go for it, Henry. Let me hear who won, and reverse order, please, my friend.
Reverse order. I've got it. It's only taken me all year. So in third place with 12.6%, we've got J at jet_aero. Had a portfolio including Assetco, Critical Metals, Warehouse REIT, Kazira Global, and Ferro Alloy Resources.
Previous winner, Henry. It's a previous winner of a month.
He is a previous winner of the month.
Yeah.
With a second place return of 13.9%, we've got Briley Lucan at Briley Lucan, with a portfolio including Burford Capital, Litigation Capital Management, Jadestone Energy, Thor Explorations, and Emerson. But in first place with a very strong return of 14.8%, we've got Andrew Guppy at Lost in the Fog 5, with a portfolio that included Avacta, Macango Resources, Revolution Beauty, Audio Boom, and Gulf Keystone Petroleum. Very well done, Andrew.
Very well done indeed. 14.8%. Interestingly, there was it. Avacta,
Macango, Revolution Beauty.
What was the other one?
Audio
Revolution
Boom,
Beauty, Audio Boom,
and Gulf Keystone Petroleum.
Gulf Keystone, and Revolution Beauty. That's a very interesting group in there. Okie dokie. Well, congratulations to you, Andrew. Lost in the Fog 5. Please get in touch with us, DM Henry or I, with your details, and we'll hopefully, if we do get in touch with us quick enough, you can get your 1 month subscription to Sharescope and your Harriman House book before the new year, and start reading it while you're chilling out, watching the snowstorms or eating your mince pies.
We've
Anything you
also,
want to add to that,
and
Henry?
I won't. All I will say on that note on the competition is that we've got a winner that has leapt ahead. There's a close grouping, but yeah, our number one at the moment is a good 20% ahead of everybody else in the table.
Wowzer.
So
20% ahead
yeah,
with 2 weeks to go.
20% ahead with 2 weeks to go.
Wow. We will not share who that is until next month.
And I know I can see
Fantastic.
exactly what's driven it as well.
Right. Yeah. One
It
stock
stands out
again.
like a
Okay.
sore thumb. So yeah.
Right. Interesting times. Interesting times. Okie dokie. Henry, absolutely fantastic again, mate. Thank you ever so much for your input and your dedication to crunching them numbers and getting those percentages together for us. Congratulations to our top three, Jay, Burley Lucan, and Andrew Guppy. All very well done. And thank you all again for the charity donations that you've provided us with over the past year or so and more recently. And anyone that's not donated yet that could donate, that would like to donate, please consider making donations to the Owners Charity of Centrepoint at the Just Giving page that Henry just mentioned. We look forward to speaking to you, ladies and gents, again in 2 weeks' time when we put out another pod. I'm going to be contacting some individuals that have supported us significantly over the past year, and we're going to try and put together a special pod for the next episode that will go out probably around the 27th, 28th, maybe of December, and then run for 2 weeks as a little Christmas special. So we'll look forward to seeing you, ladies and gents, in 2 weeks' time. Have a fantastic, fantastic Christmas. Spend lots and lots of quality time with your friends, loved ones, family, extended family, colleagues, and enjoy your Christmas parties if you can. Yeah. And if you work at home alone on your own, invite some people round and have a party at home. Why not, Henry? Why not?
Excellent idea.
Right.
Put on
Ladies
an
and
episode of
gents.
the Twin Peaks podcast to dance to.
Absolutely. Why not? Why not? Right. Ladies and gents, big thank you to Henry Viola Hare. Please follow him on Blue Sky Social and X at HT Viola. And we will see you in 2 weeks' time. Take care of each other. Be kind, be generous, be thoughtful, be considerate. And we will see you in 2 weeks' time. Kindness matters, folks. Spread it, sprinkle it everywhere. Henry, thanks ever so much again, sir.
My pleasure, Peter.
All right. Ladies and gents, over and out. See you in 2 weeks' time. Take care and God bless you all.
This Twin Peaks Investing podcast is brought to you in association with ShareScope, the UK's #1 investment data and analysis software for private investors and traders.